Okay, so I really don't have any agenda of stuff to talk about.
All right, well, before you start, Nick, can I just ask you one question?
Yes.
All right, I want to just ask you this. I asked Blake before I joined the team, because, you know, there are a lot of great, you know, I did over 700 interviews, and there are a lot of excellent, proficient, consistent traders out there. And I said, well, Blake, how did you choose Nick and Grega and Steve? And his answer was, I just chose the best at what they do. All right, he even included me as a host. So, you know, I blushed for a few minutes. It humbled me. In fact, it's with the greatest pride I'd like to announce how humble I've become. But I'd like to ask you, what was it about Blake's proposal to you to become part of the FA team that attracted you to work with Blake and Steve and Grega and Steve?
Honestly, in the beginning it was just Blake, and I think it's just because I know Blake. You know, I've known Blake for so long, and the opportunity to like grow something from the beginning.
Okay.
Yeah, that's really what.
Did you? So you got to know Blake through the Morning Ed show?
Yeah, no, way back like 2009, 2010 on Twitter.
Okay.
Really, I think Blake and I were like original Twitter friends. So.
Oh, okay.
Yeah,
so
that was it.
You had
really.
a very strong virtual friendship, as my buddy Ricardo.
Yeah, like, and you know, way back. It seems like Twitter's enormous now, but way back then, it seems like there was only like 100 of us or something, and yeah, we would share charts all the time. So pretty much what I hope we grow here. So it was good.
Okay. So I'm glad to be working with you. I always enjoyed interviewing you. You know, great crew call you made last week. I know you said you were lucky, but it wasn't luck, because I remember one of our interviews, I think yen was trading 125 and you were very bearish, and that was a bit, you know, that was a 2,000 pip move to the downside. So you're a very lucky trader. If you say it's luck,
I just
you're a very lucky trader.
I just really look at patterns, you know. I look at patterns, and they either work or they don't. And the more that lines up there, and especially, you know, with sentiment and stuff,
right.
That's really what I look at. So.
And how did you gravitate towards harmonics, and how long have you been using harmonics as your main tool? Because I've been around a while. I don't want to say how long. But I didn't notice people talking about Gartleys and crabs and sharks and all of these types of harmonic patterns until about 2 or 3 years ago. They became popular.
Yeah, I'm going to say probably about 2008. You know, I went on really quite an adventure as I learned as a professional trader. You know, once I went, you know, I learned a really good strategy, but once you learn something, it's always like you have to know more, and I was completely fascinated with the market. So I wanted to learn Fibonacci. I read Connie Brown's book, my first book on Fibonacci, and then I read, and then I remember seeing a blog actually about harmonic patterns, and I was like, oh, I have to learn about these. And I got the indicator, you know, that would draw them for you, and it would really annoy me because it didn't quite draw them right, or it used the wrong swing. So I threw that out, and I really draw them all myself now by eye. I don't use anything to search for the patterns for me, and I find they work much better if I do them myself, because I'm really confident in them. So I'm going to say, yeah, about 2008, 2009, and I blogged a bit about them. And I blogged actually originally quite a lot of my adventure in trading, because I started off just trading moving averages and inside bars and stuff like that, and then really progressed. I think that harmonics just gives more weight to the levels that I look at. I still look at all the original things I learned.
So what's this pattern called that gave you the idea that crude was due for at least a retracement move?
Okay, so I was looking for crude to make a seasonal low in February and March, and it's made it quite late this year. And I think the reason it made it late was because of positioning. Everybody was super bullish
Right.
from the start of the year, and we really couldn't go anywhere until we shook those people out.
Yeah, they
And
said, I believe the COT readings, Nick, before we broke from 55 to sub 50, that a certain group, I think the hedge funds were more long than they were at 140 crude at the major high many years ago. So it was a record long position that had to be
yeah,
reduced. So that was what was holding the market back, right? They had
sorry
to
about that. I just had a quick look. I've got some metals positions on, and I just just have to keep looking at what they're doing because silver's been so scary.
yeah,
Um,
yeah,
so yeah, so we had this thing and we sold off and made this first leg, and this was an ABC. This was pretty clear, and then it was just really sideways. You get bunching up sideways like this. You know you move, and when you look at how the market was positioned, it was only going to go lower. So I think when you look at each of these, like this little rally, I don't know if you can see my mouse here. This was an
yeah,
ABC rally.
right.
This here was an ABC. So each one of those, I look at really simple measured move ABCs, and each one of those was a really good sell entry in crude. And then once it breaks and it's on its way, this was a 50% retracement, give or take, in this when we first drew the pattern, it wasn't in this contract, but this was a 50% retracement. When it does that, the minimum that you're looking for is a 1.618 of that rally extension. And in fact, this went down that pattern, which was the 886, which line
So there's more left.
0.618, which was also an ABCD from that opening January high. So for me, everything lines up. If you bounce off of 50%, you're always looking for either a 1.618 or a 2.618 extension. It was an ABCD, and it was the 886, which makes it a back pattern. So, and they always retrace back patterns, reverse really hard. They're always sharp reversals. So, another thing I've noticed about trading crude is, you almost get it always on, it very rarely does a V-bottom, so you almost always get a retest. So we got a really nice retest and bounce in crude. And in crude, very often the second test, will go beyond. It'll take out the previous
Yeah, I
low
was surprised
and
it
be a
didn't
false
take
break.
Yeah,
Yeah, I was surprised it wasn't. I was expecting
out
that.
first. So
Exactly.
yeah,
So yeah, all those things lined up for me, and that's why now this decline that we've seen from the beginning of January, now we're rallying because it's the seasonal trade. How far we rally will be quite important, because I'm not convinced that this first decline is the bottom in and we're going to keep going from here. I wouldn't be surprised if we see a second leg lower that's likely equal to this first decline or 0.618 of it. So that's what I'm watching for.
Let me ask you this. I think Grega came out with the same alert the same day.
He did one a day earlier than me. Yeah, he did. Yeah.
Did that give you more conviction about your count, or it really didn't matter?
Sometimes,
I mean, it's a different method, but you guys were both seeing the same thing. For me, that kind of builds my conviction.
Yeah, it builds my conviction. Sometimes, though, I definitely do go the other way, and so I'm really, when I was a new trader or hadn't been trading that long, I would find myself very swayed by other people's opinions, and I would have to shut them out and not look, or so I would do my analysis on a weekend and not let myself read anybody else's, because I wanted to make my ideas and write my trading ideas down, because I found that I was very influenced.
Yeah.
But now I've become much more
yes.
The pattern's there, then the pattern's there.
I'm still easily influenced. So congratulations.
It is hard, though. It is really hard.
Congratulations on having a bomb shelter mentality and tuning everyone.
Trust me, it wasn't always like that.
Yeah. So really, the next trade probably that's setting up is going to be a short.
Yeah, you know,
just don't know where yet.
yeah, from an ABC move like this, you know, crude really likes two fibs, the 38.2, which we've just blown through, and the 78.6. So I would say, and I'll show you it here, the next one for sure is going to be this 78.6, which is at 55. I think that's where we go, and there's all these other previous highs here. So yeah, it'll stop at 52.63, which is the retest of the 236. That would be very bearish if we stop there. And otherwise, I think we see 55.26. So those would be my two levels.
Nick, if I may, if we zoom out, in the current area we're testing, though, we do have the June 2016 and the October 2016 highs. So in my book, there is a slight chance that we might.
Let me look at the continuous chart. Hold on.
Yeah, I'm looking at the CFD for that exact reason, you know, to have a continuous.
Yeah. So we're gonna.
Interesting. And there's a gap back there.
Yeah, so we could, you know, the gaps are there, just the contract rollovers rather than other kind of gaps, so they're not quite so meaningful. But yeah, like you know, it's a range trade. Part of why this year has been so hard so far, you know, everyone's been looking for great trends and they've been great range trades. So
what's the best trend?
Difficult.
What's the best trender that you're looking at nowadays?
I'm really hoping that this is the start, and I know a lot of people I'm really hoping this is the start of a big leg lower in gold and silver.
I saw that you were, I think it was on Skype, that you had some type of, it may have been a Gartley that could take silver all the way down to 1620. Is that correct?
So yeah, because yeah, I do. Yeah, because sorry, I've got gold up. I'll put silver up. So, sorry, just a bit slow. I'll clean this up.
Take your time.
So for me, you know, this rally from the start of 2016 was a corrective ABC rally. I know Gregor counts it as impulsive, and it's just, you know, I'm not the Elliott wave expert, and he's quite likely right. But for now, I see this as just a simple corrective ABC, and I think that we've just done a repeat of that on a smaller scale. So if we come down on the daily, for me, where it's very tight, we've just made another ABC, so I am looking for a leg lower. And what I've been looking at here is the 886 of this first decline, which, you know, in a harmonic patterns, the retracement, you know, we get an impulse leg, and the retracement very often is an 886. So as long as we don't take out this previous high, and if we reverse lower from here, I think we could see another leg lower that takes out this leg, this early March low. So that's what I'm looking at in silver and in gold. So
okay, thank you very much.
Just So
would you?
I know everybody else is.
Would you correlate that? Do you think it's going to take a strong dollar for that to happen, or it doesn't matter?
I think it's absolutely the strong dollar is what we need to make it happen. And I think if I'm wrong about the dollar, then this won't work. So yeah, no, it's all about the dollar.
Okay.
So the dollar and bonds, really, metals have been very correlated with bonds. So we could look at the dollar index if you like.
Bonds go up because of economic weakness or deflationary trends. Rates come down, and gold's going up, and the metals are going up with that because opportunity costs of holding metals is lower.
Right.
And, or is it a deflation hedge, the gold as well? Everyone thinks of it as an inflation hedge. Maybe it's just in the 30s, it was a pretty good deflation hedge too.
Yeah, I think those days are over, but yeah, no, for me, that's just how it works. You know, you don't earn you certainly don't earn anything holding gold. But
Right.
it, in all other respects, for me, it just trades like a currency. So,
yeah. And especially when we had negative rates in Europe, it was really moving because it costs you money to stay in cash. You may as well own a little gold instead of paying the bank to hold your money. Okay, so we're looking at the Dixie here.
This is the Dixie, yeah. From, you know, bull, this is a big 618, and for me, bull runs very often end on a butterfly pattern. So it is perfectly reasonable to think that the Dixie has made a high in January, and that's it. But this price action, this chop, for me, the price action since the start of January has all been corrective, and that says to me that we haven't made a high. We are going to make a new high above January's high, and that's it. You know, whether you're able to count waves or not, or know Fibonacci or not, you know, on any chart, when you see waves that don't overlap the previous wave, you can say that's impulsive. And when you see choppy waves that overlap the previous one and go back into the previous range, then you can say it's corrective, whether you know anything else. And that's, I think, what we're seeing in the dollar.
Okay, so you could just trade the Dixie because of this count, or do you use the Dixie as a guide and then make your preferred long or short the dollar?
No, I look at it. I'm looking at it just because it's a really good example, but it's so correlated with the euro, and the euro is the big beast. Now, for me, you see, most people look at this. They look at the decline in the dollar from the 2001, and they say we're at the 618. We should come all the way back to the 382. So from this decline from 2001 to 2008, we've hit the 618. We should therefore normally retrace to the 382 and then return to the 50 and then rally. That's what most people looking at that would say. But what I noticed in the Dixie, now on this chart it doesn't go much beyond it, but that actually, what we're looking at here, this high in 1985, that was the high, and that this decline from 85 to 92 is exactly equal to this decline from 2001 to 2008. And if you go and look at historic charts, you'll see that what we've actually made is a perfect ABC decline. And so I'm looking for one more leg higher, and actually I'm looking for closer to 107. So if I put fibs on this, this is what I'm looking at for. Hold on, just.
So that rally in 2001 was 78.6, and this could be 78.6.
I'm actually, what I'm actually looking for. Hold on, just make it.
We're getting it, Jess.
So yeah, what I'm looking at is 618 because we've gone through the 50. And why I like it, look, if I make this bright red, so you can see what I mean. You can see how every other fib level has been really well respected. So this is the 23.6, the 38.2 was support. So that big range that we got stuck in the dollar was the 38.2 and the 50 of that bigger fib swing that I've just shown you. So for me, it's quite reasonable that we'll continue higher to the next one, which takes us to 107. 107.
Nick, do you expect that to be some kind of a terminal push higher, or it's too early to call it?
Yeah, no, that would be a Gartley. Yeah, but no, I think that we'll continue to a back pattern. Because that's where the 2.618 of this first swing is. That's the one I look at, and that's at 117. So yeah, I think that 106. I think that 106s will be resistance, but it'll be resistance on our way to 117, which is where the big pattern is, and then bigger pattern is. Sorry.
Okay, great. Look, I have a question. You covered silver. Someone was asking about gold, Nick, if you don't mind.
Oh yeah, no.
It was Fazal.
Yeah, hold on. Oh, I've made a mistake. Hold on. Let's close that. Bye. Yeah, so let's go to the weekly on gold, and I'll show you how I counted gold, the same as silver. So for me, in gold, we're in a declining wedge, and we've got one more leg lower to come. So I'm going to go up to the monthly, show you where that comes from.
So A, B, C, D takes it to 1164. Your monthly is
Yeah,
still
now,
under 1,000.
so now you look at it and say, have I drawn these fibs right? And for me, when I draw a fib on, the first retracement I'm looking at is a 236. Now, if you see a reaction from that, either the first time you touch it, or if you go through it and then you back test it and it reacts off it, then you can say, I've drawn this correctly. So we have really good reactions on the 236. So we know that this big swing from the 99 low is all good. 38.2 fibs are always messy, and so are 618s. But 50s are usually pretty crisp, and we had nice reactions off the 50. I think that we're going to keep going lower to the 61.8, which is down here at 889. So that fits with a stronger dollar view. But if I go down to my weekly chart, this is how I counted it in line with the silver.
You know what that number represents to me?
A, B, C, and then this here was 618 of this first rally. So C equals 618 of A. That's very common, corrective pattern, and that's what I believe that we saw in this rally from the December 2015 low in gold.
Okay.
Sorry, what number?
It's interesting. You're low on your telescopic view of 888, 889.
Yeah.
That was a high in 1979, 1980. And then
my chart didn't go that back far. How annoying.
Yeah, that was it. And then we had a 20-year bear market.
That makes me feel even better about that level.
Yeah,
that's
that was the end. That's when we went into, the Russians went into Afghanistan, and during the Hunt silver squeeze. So I always thought that would be a natural place for this bull market to come back and check, would be the previous high of a major cycle.
Okay, so I need to go and find that now. Or now when we hang up. Okay. So I see this as a alternate ABC where the second leg is 618 of the first leg, and then we've had, so we're still in a corrective. So for me, an equality move would have gone a bit higher, but what we've done is stalled at the 618. So this is like the golden ratio zone, between the 618 and the 38.2, and they're both very messy levels. So we extend beyond both, and so from here, stalling there again, double top, I think we'll at least come back to the pivot level in the middle, which is 1227. If we're going to go higher, that will hold. That's also the trend line from the December low. If we're going to go higher, then 1227 will hold, and we'll rally for another leg higher from there. But,
would that change your big picture? What would change your big picture? Closing over 1300? Where you could take that sub 1000 target off the table?
Closing over 1285 would say to me that the rally from the December low to the July last summer high was just the first leg of a two-leg correction, and then we would see another leg higher. So yeah, like if we close above that trend line, so if we close above 1285, then I think that this leg here was just the first leg, and we're going to see another leg higher. Yes,
right.
But that was my bull bear line.
Equality is about 1400, and if it's a fib extension, it's going to be like 15 or so. I have one. Can we wrap it with one quick look at cable?
Yes, we can.
I have a request to look at cable.
I like requests much better. I'd much rather talk about things people are interested in. So, cable, such a hard trade, isn't it? Okay, this is really messy, but I see I'm going to go down because I've drawn patterns on here and I don't want to delete them. The price action since the crash low in cable again has been choppy, overlapping, sideways and corrective, but I really do think that cable has a good chance at an ABC pattern, and I'm going to take out some of these old patterns so you can see it better.
So that would take it to the weekly, monthly breakdown under
I
130.
really do think, that cable goes to 128.
Okay.
And how do we get there? I think that I have two levels. We're going to come back down to 123.18, or we'll come all the way down to the bottom of the wedge down here, and then we'll see one more leg higher before lower in cable. I do think cable, it's going to be one of those occasions for me where cable doesn't go the same way as the euro, and so the euro might move the dollar index, and so what you might see is cable actually going the other way to all of the majors, but that's very often what happens.
So that would be very ultra bearish for a continuation move in euro pound to the downside.
Yeah. Yes, but in euro pound, I'll show you that next. I think we've got another leg lower at least setting up there. So, okay, not having much luck deleting stuff. Crude oil inventories. Should I stop talking for that? Does everybody? For me though, I have to say that then. This is a 78.6 fib, okay, on the monthly 128. When you break a 78.6, very often you won't. It's very strong resistance. It's like a hard line. We won't poke above it. So I think if we fail there, then we're going to continue to 1.17, which would be a back pattern, and then we'll rally from there. And that would match the back pattern that we see in the dollar index as well. So this is my view of cable. I think that we have a really good chance of rallying back to 128. Really good structure there as well when you look at it. ABC, everything lines up there, and then we'll see a decline to 1.17.
Well, okay.
So that's
Thank you.
That's
nice.
That's my view of cable. I'll just quickly.
That's your Nostra, Nicola.
Let me see what's on here. Oh no, it's not. I haven't got my chart up for things, so I'll just pull up my chart for euro sterling from here, from the site, if I can find it.
There it is.
Yeah, so this I haven't actually. Let's go back to the. Yeah, so the 4 hour, I think that we're going to continue lower to 84.46. This is where we failed, and then this wedge that we're in, this is my 4 hour chart, will break lower. I haven't got it on here. If I'm going to show you that bigger view, hold on. If everybody. It's not being kind to me today, sorry. Computer says no. Hold on.
By the way, 84.40 is also the neckline of the head and shoulders for euro pound. So that's a very strong level.
This time of year, I don't think that the crude oil inventories matter quite as much as the crack spread, but okay, so here we go. So yeah, this is the 84.40 level that I think that we're going to continue lower to, and if I go to a daily, for me this decline here, the decline from the October high is just the first leg, and that we'll see a second leg, ideally down to the 38.2 and down to probably somewhere around 78. depends if we break higher from this wedge and make an AB, then I think we'll only come to the 50. But if we break lower without going higher, then I think we'll go lower to about 78.50. So those would be my two options. We either do that and then, oops, and then lower to there. But if we break lower without going higher, then we'll go straight to here. So one of those twos to make an equal leg with that first decline that we've seen. That's my view of the euro pound. And then it's a buy again.
Thank you so much, Nick, and I look
They're
forward.
Very welcome.
You know,
Thank you very much,
great,
Nicola.
Yeah, great to be able to have you.
No, I don't mind.
Call on you at any time. You're like, you know, my.
I don't mind coming in. You know, if you've got nobody else and I've got half an hour and you've got half an hour, I don't mind coming in and showing my.
Okay. Well, I love your analysis. I've always been a fan, and glad that I have access to senior alerts, being a subscriber. So
excellent.
Thank you so much, Nick. Have a great afternoon, everyone. Thank you very much. Let's see. Tom Starling loves you. He wants an 8x10 glossy picture autographed. Let's see. Anyway.
No. I've got a face for radio.
So let me ask the crowd here, what did you think of today's content? Do you think that we provided a lot of great ideas and charts, and from me to Blake to Steve to Nick? So in my...
I didn't get a chance, by the way, to talk about the indexes, but I have to say that I'm a huge Peter Ghosteen fan, and I know exactly who he is. And I completely agree with his take on the stock indexes yesterday.
All right, so you think, so then you're labeling it from the flash crash low to read to whatever high we finally make, and then S&P's pull back to about 1,800. You're in that camp?
Yeah, but we know when. Yeah, exactly. I don't think that we'll come back to the 50% though, like he does. I think probably only the 38.2. But yeah, in every other way, I agree with him.
1950.
Yes. Yeah, hold on. I'll get it up for you while you chat.
I think it's about that, because I know a lot of people. So that would take away all the gains from the election, because the low on election eve in the overnight market was 2030 when it was down the limit. So that would take it all away. Okay.
Yeah.
Okay. Thank you so much, Nick, again.
Very welcome.
I'm really enjoying working with each and every one of you here at F.A.C.E.